morning, everyone. Marv Eisen from Timeless Dollar, and it's about half an hour before market opens. It's 9 a.m. Monday morning, February 22nd, and you're looking at the 15-minute chart of the S&P. And on this chart, if you recall, on my last pre-market video, I pointed out that the market was set to open on the 18th, February 18th, lower than the close. It was going to gap down, which it did, and I did say that most likely it was going to fill that gap and then float lower for the day, which is exactly what happened. On February 17th, we closed up here at 39.31 and closed the gap and then floated lower. So let's see where the market's going to, what the market's going to do today. Starting out with the U.S. economic calendar. Remember, we always should look at the economic calendar to see what announcements are going to be made for the day. And at 10 a.m., leading economic indicators. That's not going to be a market mover. Remember, these indications are already priced into the to market prices. Investors Business Daily. Well, the overall big picture shows that our trend is still intact, our upward trend is still intact, but there is some information that we need to take note of. Of course, Boeing has some new problems with some engines that have failed in flight. Bitcoin is up, of course, for us futures traders, not going to make so much of a difference. Going over to CNBC. Dow set to open lower by 180 points. Apple and Tesla shares decline, which is not necessarily bad news for the market, although the indication on the opening price has already factored that in. But I want to point out something that that I noticed here. There was a headline, actually a byline, that the 10-year Treasury yield jumped 14 basis points to 1.34, near its highest level since February 2020. So the 10-year Treasury is at the highest level in about a year. So when the Treasury market perks up, that's a time to be especially wary for stocks, because at that time, big institutional investors, they switch their money from equities to the interest rate markets. And the stock market is very interest rate sensitive, especially since for the longest time now, interest rates have been extremely low. At any rate, the market closed on Friday, on the 19th, at right here at 39.06, and futures are trading. I'm going to go to the Emini now. Futures are trading 39.76, so we are about 30 points below where the market closed on Friday. Remember, on Monday morning, there's always a greater chance of a fog of war move. Remember, a fog of war move, if you've taken my course, a fog of war move is what I define as a move to the upside for no reason on Monday morning, a quick move to the upside. We can take advantage of that. If we see indications the market is edging higher on the open, we can jump on that. Don't do a limit order, do a market order, and you can pick up a few quick points there. All right, then, so that's my call for Monday, February 22nd. Marv Eisen from Timeless Dollar. And if you're looking for information on how to trade S&P E-mini futures or micro E-mini futures, check out my site at timelessdollar.com. I have a course that will teach you exactly what you have to know. There's no fancy stuff. There's no tremendous knowledge base that you have to learn. It's just great information. It'll teach you how to trade the market consistently and successfully. And remember, always exercise patience as a trader. Okay, have a great day.